Car payments have reached record highs in recent years, and Americans are feeling the pinch.
They are losing their jobs, and these firms are going to go out of business, and he's nuts.
Global chip shortage still hampering car production.
The rate of inflation soaring to its highest level in over 30 years.
The average car price is nearly $50,000, a 30% increase over the past 5 years.
Basic automobile is $50,000 or more.
Monthly payments are also close to an all-time high.
There are plenty of recent models that are going for more than $100K.
Car loans used to be simple. You'd walk into the dealership, find the car, get the loan, and then drive off. But in 2025, that happiness is turning into regret for thousands of people. People are waking up to reality that in today's car market, car loans are leaving them broke, stressed, and trapped in financial decisions they can't really undo. But how exactly did this problem become so widespread, and what should you do instead to protect yourself from falling into the same trap? Let's start with the obvious truth that a lot of people seem to forget. If you financed it, you don't own it. And while that might not bother you at first, here's the real problem. Cars are rapidly depreciating assets and immediately lose value as soon as you drive them off the lot. And when you finance vehicles, you're borrowing money with high interest rates, and you're buying something that loses value basically every day. Most cars lose 10 to 20% value the first year alone, and by year 5, that's nearly 60% the original value. And now you're stuck with a huge loan with a car that's worth way less than what you owe. And that's called being underwater. And now in 2025, it's happening to people more than ever. But hold on for a second, let's talk about the numbers. In 2025, the average car payment is around $533 per month. And again, this is for a used car. And for new cars, every month, the average is around $736. And that doesn't include insurance, maintenance, fuel, and registration, which could easily push your car over $1,000 per month. For someone, say, making $3,000, $4,000, even $5,000 a month, this can easily eat up 25 to 40% of your income. And that's before rent, food, and everything else that you're paying. And this is why so many people feel that they're not just working for payments, but also for car payments. Stuck in a lifestyle that they can't afford, but they also can't escape. To make these car payments seem semi-affordable, dealerships are pushing 72 to 84-month loans. That's 6 to 7 years on average being stuck paying one single car. To put that into perspective a little bit, a car will lose most of their value by year 5, and that same car is being financed for 7 years. And during those years, you're going to be paying thousands of dollars in interest, and if you want to ever sell it or trade it in, you'll probably still owe more money than what it's worth. And honestly, it's the perfect trap. Low monthly payments, high long-term costs, and zero flexibility. Car dealerships are designed to make you feel like you're upgrading in your car or just your overall lifestyle. The test drives, all the cars and displays, the smell of a new, that new car smell of the leather, it's all marketing and it's working. And that emotional high fades extremely quickly, and what you're left with after a couple of months or years is a car that you didn't actually need, and it's putting you in worse financial states. And the thing is, people don't regret their car, but they don't regret buying their car, having the car in the driveway. The thing that they regret is loaning the car. And now in 2025, when everything is more expensive and savings are just generally harder to build, emotional financial decisions like these are putting people into greater financial troubles for their future. So after all of this, what should you do instead? Buy used and pay in cash if possible. Even a $6,000 car can get the job done. And if you have to finance the car, try to keep the loan under 36 months and payments under 10 to 15% of your take-home pay. And the big thing here is to avoid, high-end luxury cars even, but only buy those if you can truly afford it. They're great for your status, they're great for your display, you feel good in them, they are awful for your wallet. And just because your friends or your family or whatever are buying new cars doesn't mean you need to as well. Cars are tools to get you around places, not trophies to put in your driveway. Don't let social media or anything else tell you otherwise. And again, I'm not downplaying those people with Lamborghinis or Ferraris or whatever. If they deserve it, they deserve it. But a lot of people, they buy these cars mostly on social media. You know, you see a 23-year-old with a Lamborghini and a Rolex. That's not his. He just financed it and he's in huge financial trouble. In 2025, car loans are becoming one of the biggest financial regrets that people are making. And again, not because cars themselves are necessarily bad, but because how easily people fall into financial debt trying to chase them. And you don't need a brand new luxury Lamborghini or something to be successful. You need financial freedom. And that means a lot of the time making smarter financial choices, even when it's not the flashier one. So you guys, let me know what you guys think down in the comment section below. Make sure to watch this video right here. And as always, thank you for watching.